Welcome back to Investing Experts. Happy to have Ryan Wilday back on the show. He runs the investing group called Crypto Waves. Avi Gilbert, who we had on a few weeks ago and a few months before that, and runs the investing group, the Market Pinball Wizard. He has an umbrella of investing folks underneath them, and Crypto Waves is one of those investing groups, and it's run by Ryan Wilday. Super happy to have him on today, talking crypto and Bitcoin and Ethereum and Coinbase and what stocks he likes, what ETFs he prefers in the space, being patient through this time in the market, how he's thinking about crypto in general, how he thinks about investing and trading in the space. A super edifying conversation about the crypto space. I hope you would agree. Join over 250,000 subscribers by becoming a premium Seeking Alpha member. New subscribers get the first month for under $5. For all the articles mentioned in this conversation, you can find the links on our show notes. And for full access to all podcast transcripts, all analyst ratings, stock quant scores, dividend grades, subscribe to Seeking Alpha Premium at seekingalpha.com/subscriptions. Ryan, welcome back to Investing Experts, but our first legit conversation on this platform. Welcome to the show.
Thank you. Good to be back.
We stole one of your episodes from James Ford, the pragmatic investor. That's what I'm referring to. But it's great to have you on talking crypto. Yeah. You run an investing group service on Seeking Alpha called Crypto Waves. You discuss Elliott Wave trading, and a lot of people in our audience are super interested in that. If you want to kind of synthesize how you look at the crypto markets and how maybe the markets in general even.
Yeah, I mean, when you talked about crypto, I like to divide the market into a few areas, and we cover crypto equities too. That's an important component, as well as coins. First, what in crypto is what we call investment grade from our standpoint. And from that, if you're, say, want to come into the market as a hodler, as we say, or long-term holder, we really push people to focus on Bitcoin and Ether. If you look at bullish and bearish cycles over, I've been in this since 2012, professionally as a analyst trader since 2017, and through all of these cycles, it's pretty clear that altcoins, by and large, they're very experimental projects. They are questionable from a fundamental basis that can be debated, but I can tell you with nearly 100% probability, most of them don't last from one bullish cycle to the next, other than Bitcoin and Ether. So so basically, on the track record of what has been proven, we push people towards Bitcoin and Ether if they want to be hodlers, so to speak. And then when you get into altcoins, both Jason and I, who runs the service with me as well, we're both sort of well-bred swing traders, and we find altcoins really great. Altcoins are great for swing trading when the time is right, and altcoins can fall into that. And we can get pretty amazing risk reward. Everyone knows the volatility of crypto, and we try to capture that with as little risk as possible. I think some people would probably be surprised knowing me how little my bets on altcoins are. Like they are very, very much for me a tool for high return with very little at risk. So treat that way. So I would put that. So that's that part of the market. And last, we have crypto equities, and it's classically been Bitcoin miners. I think these companies are pretty poorly run. If there's any CEOs watching, they can give me a call or whatever and debate the validity of the statement. I'm talking mainly in general of the whole group, and that's because they've largely financed their operations by buying miners at the tops of Bitcoin, leveraged up with that Bitcoin, and then bought equipment at the top. They're in an arms race against the network hash rate, which is basically the rate at which they can produce Bitcoin, and with that they sort of get their cash cost of mining. And so I give it to them. It's a tough business because I came from the product business. My last corporate job was Samsung, and Samsung would love to have its product go up, and the product that it produces go up in price. And these miners have that benefit, right? Samsung's phones they're going to go down, usually not up. And Bitcoin, these miners produce, goes up in price. The problem is their cost to produce goes up along with price. And, that's something Samsung would never experience because they're constantly bringing their costs down. So I like to differentiate a classical product business, to what these miners face. And it's a tough business that, okay, price is going up, but so is your cost. And you're always trying to outrun that, often with financing. And it's just tough. And so I think the only way to manage that is to learn how to hedge, sell at the top. So we cover them. I do, again, don't think they're investments because of that reason. We get some great swing trades out of it. A lot of other interesting stocks starting to show up, like Coinbase. It's not yet said, okay, I'm ready for a long-term uptrend, but it's pretty interesting. They had some interesting news this morning from a fundamental basis. It gets more and more interesting. And then another stock we cover closely, APLD, which is sort of a data service for the mining industry, as I understand it. And again, I'm a very technical trader. Sometimes I don't even know what these companies do, but that's my understanding. And it's forming to be a pretty good chart. So we'll find plays like that in the industry as well. And then that's kind of my breakdown again: the big coins, Bitcoin, Ether, altcoins, and then sort of the crypto equities. But even with them, we got some good groups and bad groups.
So it's interesting. You said that you're a technical trader, and so you're looking at the charts, and a lot of times you're not even interested in the fundamental. It sounds like sometimes even the basic.
Yeah, I wouldn't say that. I mean, I have an MBA, like, from my product side, like, so I'm versed in corporate finance. I wouldn't say no, but what I don't look for is a fundamental reason for a chart to start rallying. I don't trade the news. A good chart is a good chart, but I would say it's fairly fair to say that companies are in poor fundamental basis. Those uptrends don't last. Now, from a trader perspective, I say they're not lasting when support starts breaking. Very classical technical thinking. And most of my supports are Elliott Wave based, depending. I trade some other styles at times, but so I have no problem trading an uptrending crappy company. As long as it plays out, it's playing out, and then all of my trades are very tightly managed from a risk perspective. Now, when I talk about my investment portfolios, like those long-term holds, because it's not like my entire portfolio is like day trading every day, right? Or even swing trading. I've got a lot of things that I manage, and most of it's ETFs. But from that perspective, I look at interesting opportunities from a fundamental basis. And then, but my level of aggression with respect to those investments definitely still has technicals in mind. So I wouldn't call myself someone and ignores fundamentals, but when something's sort of falling into trading, like this company APLD, which is like, what are they doing? I think they're a data center. Again, I've been doing well trading it technically, and I never stop to ask myself whether it's a long-term hold yet, because the chart doesn't say that. So if it became a long-term hold for me, I'd want to understand the business a little bit more personally.
And what does the chart setup look like when you start looking at it for a long-term hold?
So in this APLD, for instance, it's very specific to different structures that we see, but APLD from an Elliott perspective is trying to form what we call leading diagonal off its low. A lot of leading diagonals off all-time lows fail, so it's a long ways. But if it does hold, it forms 5 waves, and I think I can't remember the final target to fill in 5 waves. I think it's in the 3 figures, and right now we're trading it at $7. So it's got a crazy volatility characteristic to it. Like we've been trading it since it was in the 3s, I think, and now it's in the 7s. And that was this thing moves like 5-10% a day. So if it moves up to again somewhere in the 3 figures, then we mark what's called a wave 2, which is always retraces all of those 5 waves, or most of it, sometimes like 3/4 of it. And if that holds and it breaks out over the top of the previous, then that's a really good sign that a company's got some runway. From at least technicals are at least hinting. And then yes, that's when I start looking at balance sheets and cash flows and stuff and say, like, am I gonna put this in my portfolio? Which again is mostly ETFs and stuff like that. So for a stock to graduate, for me personally, to my portfolio and investment portfolio, it's got to be very interesting to me from both a technical and a fundamental basis.
And you mentioned,
because most of it's just. But
no, sorry, go ahead. Most of it's just.
I was saying again, most of it's ETFs. So so I don't have to babysit. Yeah.
Right. ETFs built-in babysitters.
Yeah, exactly. Yeah. I hire babysitters in ETFs. Yeah, to a degree. I still watch them.
Yeah, that's actually a pretty good synonym for ETFs. You mentioned that Elliott Wave, sometimes it's not the only strategy you use. What are some of the other strategies and when would you implement them?
I have so like I was trying to think. So like sometimes I'll use volume profile to day trade. That's mostly honestly in Forex. I mean, crypto, I would say Elliott Wave works really well because it spends so much time not moving. Like day trading crypto is not fun. So when I say I use like volume profile and liquidity zones, I'm talking about day trading Forex, sometimes futures like S&P 500 futures. And then the other thing I have is I use a machine learning platform to do some algo work. And I do in the service, we are running a couple algos. Actually, the one we're running in Crypto Waves is not machine learning based right now, but I do a lot of quantitative. What are some signals, technically speaking, that have played out, and with some statistical bearing, and then with validity, basically. And sometimes machine learning comes into the construction of those signals. And again, it's not just on crypto. I use it on equities and whatnot in my own trading, and I have some auto trading going on in some of these algos. So, and it's basically the designs of these algos, something I would never come up with. Like they have weird calculations and whatnot that the computer suggests after doing some tests. Sometimes they play out. Sometimes I have to turn them off. Like they're not working like the results suggested they would. But it's something I do in terms of my trading. I like to have as much automatic as possible, but not always I have enough time to do all that.
Yeah. Using all those tools, does it ever make you think about AI, the AI sector, and kind of what makes sense over there?
Yeah, I'm curious whether they're going to make easy AI tools. There are a lot of places that have claimed AI. I wonder if they are going to make tools for regular investors to sign up for subscriptions and whatnot. And at the same time, I wonder if that's going to really work, because a lot of times when you find an edge, if there's an edge being broadcast out to a bunch of subscribers to a tool set, it may dilute the actual results. Because no matter what, whether it be a human or an AI, you're still looking at past history, right? And then you're trying to move it forward in kind of a predictive basis. And to call that actually predictive, I think is a misterm, right? You're really saying that this past result could potentially carry out into the future, right? And like we say, like past results are not a guarantee of future results, right? It's that old thing in investing, and AI is no different. It doesn't matter, whether if I'm using a machine learning platform, that's not per se AI. It's just sort of a brute force machine learning, like looking at things that I can't look at fast enough, and trying different things. And like, again, it's just finding past results, right? And then as you move forward in time, it may prove to be predictive or not. So it's not that easy. It's not like I don't expect AI. AI is already being used in the investment space, and I don't expect it to be so revolutionary. But I'm interested in it. I've used ChatGPT to rewrite code because I'm not a great coder. Like I've been trying to learn a few languages to get by. I don't have the time to be super devoted to it. Fortunately, the platform I use has some code writing itself. It has some skills, and then I have to learn how to edit it. So ChatGPT's been cool in that regard. And then, yeah, I hope to expand the use of it personally in trading. But yeah, it's just time to play with these things. And like I run in the service, honestly, I'm working 80 hours a week on the services, just making the best I can personally. I want that. That's my primary goal. So
Yeah. Talking earlier about the Bitcoin miners, how do you see that area of the crypto space developing? Do you see it kind of the issues that you have with them? Do you see them staying that way?
I think either somebody's going to get religion or not, and it may be one of the existing companies, or it may be an opportunity for an existing company to come along and do it right. I think they're also vulnerable to companies that can um, do it well as a kind of side business, like an energy company. We haven't seen energy companies pick up mining wholesale, but the whole game of mining is cheap energy. I mean, it's not that's all of it, because you have to continually upgrade your equipment. But if a company is producing energy and they've got waste energy, if I was running an energy company, I'd be mining Bitcoin with any waste energy I have, because it's sort of free at that point. It's like I'm either gonna burn this energy off, or I'm going to sell it if I can find a last buyer, or mine Bitcoin. And so I think that's how it's going to evolve. I think in regards to what I meant by getting religion, I mean, stop financing equipment at the top of the Bitcoin market when euphoria is high, and learn to finance at the bottom. And I haven't, I'd like to see a company. I'd be interested in a company that started a hedging department that was hedging their costs forward, learning from gold mining companies. I mean, they have to survive an asset that runs in large ranges over a period of time. They've learned a lot about how to sell forward and to manage costs and keep their financing under control. So even a miner, my eyes would perk up if a Bitcoin miner hired a gold mining company CEO or COO or something like that. It's okay. That'd be a company I would watch. And it's old school stuff that is so basic in the commodity space that these guys are trying. I mean, I know what they're doing. They're trying to build their balance sheet with a bunch of Bitcoin, and that Bitcoin looks bad on the balance sheet because it gets accounting impaired. I think that gets impaired in terms of accounting once it goes down in value and cannot be repaired, so to speak. I don't know if that's an accounting term, but it can't be pushed back up on the balance sheet value. So they have. I don't know if that changed. I think I got word that had changed. So I understand that they have a mission to really build the Bitcoin on the balance sheet, and they don't necessarily care whether that balance sheet is impaired by the Bitcoin. But I look at their cash flow statements and the way they're diluting shareholders. A lot of them are releasing shares to dilute shareholders so they can pay for more equipment. Some of them are financing and getting indebted. Less of that has occurred in the last year. There's been a lot of dilution, and I'm just not interested in being a long-term shareholder in something that is a tough business where I'm getting constantly diluted. And the long-term charts reflect it. They do not look great.
I'm just curious because we had a couple analysts on a few months ago talking about Iris Energy. Do you have any thoughts on that specific Bitcoin miner?
Is that IREN?
Yeah, it is.
Yeah. I don't like the chart again from the long-term basis. I haven't been trading it personally, but I've been posting it for subscribers, and it's we've caught some good turns in it. Again, I haven't had a position myself, but it doesn't look good. It's going to be interesting to see how it reacts to Bitcoin. Bitcoin has a really nice swing position forming. We talked a lot about that extensively with James recently. We talk about it here, but Bitcoin's in a good spot to run as long as it can break out of this region, get out of its malaise. It'll be interesting how Iris and other miners react to that. I'm sure they'll have some sort of reaction, but largely in the last week, we've seen a lot of decay in all of these charts. And it makes sense as Bitcoin's kind of wandering down, but a lot of them have broken what we consider support, or we will say morph their pattern, meaning the Elliott Wave pattern is no longer clear, or it's gone to one of our alternate counts. That's not really a good sign. Like when things as a sector are all doing that. And again, so the question is, I think we use this term tortured chart. I think that over the next 8 months we'll have some nice runs in miners, but that we quote unquote tortured charts. It'll be very difficult for us to find support targets. It makes the trades challenging in terms of parameters. I mean, one of the things we pride ourselves on, very clear parameters on trade. This is where you stop out. This is where you take profit. And again, we will take out a decent amount of stops. That's part of the business because these things are volatile and we really want to get out safely. And so, because we're not always right. And unfortunately, with a lot of these minor charts, it's become very difficult in that regard. And just some charts are just unclear. It's true of the entire sector. It's nuts. So I'm very cautious about it, and we'll see how that all plays out. Does not bode well for the long term. I mean, when charts look like this, on such a grand scale, which is basically the entire move from the bottom in 2002 to now, it looks kind of tortured. It's not really good. It's not a good sign when that much of the chart is looking so bad, so tough. So anyway,
is there a point when you get out completely?
Every chart's a little different, but in general, if a chart retraces, let's say you have a strong rally, let's say an altcoin, for instance. I'll use that for instance because miners are very special. But if you have what we call an impulsive rally, say in a Bitcoin cycle like 2021, a lot of altcoins did. It's very classic for altcoins to retrace more than 764 of its entire impulsive rally. That means that impulsive rally is very clear to invalidation, and we have to get out by then. We also want to take profit at the end of that impulsive rally, and any buying we're doing into the downtrend is going to be really, really tiny. So we should be stopping out with very little pain. That's number one. We have a whole process around that, and a lot of times we just wait till it shows signs of real reversal before we add. So the 764 retrace of its entire lifetime rally, so to speak, is the no-go. Below that, it's not tradable. It's not longable. It might be shortable, but it's not longable. And then when you talk about miners, some of them have done that, broken that, and some have not. Iris blew through previous all-time lows and is now working off a fresh new all-time low from November 22 and is corrective off of that low. That's not a chart I actually even go in long, and that's why I have no position. Some of my subscribers do. Again, I don't handhold subscribers. I give them, this is what I'm trading and this is why, this is my analysis. I'm not their advisors. So some of my subscribers, who are very, some of them like to take shots on charts like that more than I do. They have been in Iris. It's the problem with miners is that what I just said about Iris, that their rally off of the all-time low at, or the low, not an all-time low for all charts, but the November 22nd low is all across the board corrective, as we call it. There's no impulse. And so all of my minor positions, if I have them, are small. I'm starting from there. They're just really not healthy. And so, I'm now, if that rally from the 2022 lows, again, retrace 764, I will not be in at all. I will be totally out. And that'll be case by case, because every miner will kind of do its own thing.
Gotcha. And you mentioned Coinbase. I'm curious what you like about them and maybe what you don't like about them, or what investors maybe should be cautious of there.
From a chart perspective, well, let me talk about from a customer's perspective, and this is where I'm a little bit negative. I trade most of my trading on Kraken, which is U.S. exchange without any. They've also had some SEC run-ins, but they've settled and they've moved on. I've been trading with them since 2012. Most of my trading's there. The fees are lower. Their customer service is more responsive than Coinbase. I have an account at Coinbase. I use it every once in a while. So if there's that side, the other side of it is, from a fundamental perspective, Coinbase has always been a little bit easier for people to onboard. And really, in the United States right now, the only place you really can onboard if you're interested in trading crypto or interested in making your first investments. There's some apps, and but they have done a good job of being sort of approachable from a UI perspective. And if you're not an active trader, it's pretty good. So if you think of how many people are going to become active crypto traders, my judgment about why I hardly use them is more my needs. I think from a lot of other people's perspective, they're a go-to, and really the only one they're the last one standing. I mean, after FTX went down, again, there's some apps here and there, not all user friendly. If you get into self-custody wallets, people kind of have to graduate to that from their first crypto before they start building their own wallets and managing them. So Coinbase is a good alternative. And also Coinbase has now created their own chain and wallet in a Web3 perspective, so they can do a good job of educating customers to jump into that as well. So I think they're a very sort of approachable educational space for crypto users in the United States who have never done it before. I do a lot of teaching for people that have never touched a crypto, whether it be in my personal life or at conferences. And I always point them to Coinbase as sort of the easiest onboard. And so, so from that perspective, I like them. They obviously have enough money to fight the SEC, which I think is a good sign. Now, hopefully they don't burn themselves down. And then they have an interesting chart, which even this morning, actually, they just got approved by the CFTC TC to trade futures Bitcoin, which I have to look into the product that they're offering. So they're making some headway from the regulatory standpoint as well. And from a chart perspective, it sort of looks a little promising from a reversal off the all-time low. It's not there yet. If it holds 37 and reverses before then, so it's now kind of pulling back out of the 80s. It's pulling towards our main support around 37. If it doesn't touch that area, or it hits that area and reverses, that would be a very good sign that this one could turn into a long-term hold. I actually have taken a shot and put some of it into my long-term portfolio. It may not stay there below 37. It won't, but I've taken a shot and kind of building a longer-term position. We'll see. Again, like a few stocks go in my portfolio versus ETFs, but I'm taking a shot on that one.
You mentioned altcoins as one of the lanes that you're focused on, and you wrote an article, I guess, a few months ago about 3 altcoins specifically on Seeking Alpha. Are those the 3 that you focus on? Are there others? Do you dip in and dip out?
I don't even remember what the article was. So it was probably a while ago. So you can feel free to remind me.
Well, let me tell you.
Yeah,
3 altcoins to consider in May of this year.
Yeah.
Immutable X, GMX, and Rocket Pool.
Yeah, so GMX broke our support. It may have been in that article. So I have gotten out, but I still like a lower support in the 30 region. So I'm watching to see if it will reverse there. I like the overall chart. I actually also like the fundamentals because this is a coin that is basically a decentralized exchange and they share fees with the users. So it's actually takes in fees and gives it out to the token holders, which is sort of, and this is external money. It's not like they're printing fake money in the form of altcoins and giving it to users. They're actually taking in fees for trading and then giving it out to the token holders, which that's some real fundamentals versus that's almost like a dividend, right? And so I like it from that perspective, which again, most altcoins, I don't have a good fundamental view. They're just sort of hot air or experimental. And again, if there's no real economics, then it should be questioned. But so again, I'm interested in if it finds lower support, but I had to get out of the way for a little bit. IMX is trying to find support, so I still have a position. It looks promising still. If it starts to break 60, I'm concerned. 60 cents. Let's see. Rocket Pool broke high level support, and I don't remember how I listed that in the report in the article. I still have a position. I still like the long-term chart, but it's going a little bit lower, and I can't remember where the support level is. Yeah. So honestly, the mixed view of those altcoins, and these are some of the better. It really shows where the altcoin market is. It really hasn't finding a footing yet in this recent downturn. Again, some of them have held November lows, November of last year or not. Those that have held lows, those are more promising. And then now the question is whether they're going to hold like more of a local support level. Then Bitcoin has a great setup as long as it holds 21.3. That will tell a story for a lot of altcoins as well. So if Bitcoin can hold its support level, and then you start to see it take off, and then altcoins start to follow, that will be a good sort of understanding. In terms of your first question, which is what do I follow? When it comes to Seeking Alpha, I will release tidbits that I think are interesting, most particularly interesting. But I have probably a dozen altcoins on a weekly report I give to my service subscribers. So and they can be at all different levels of nearing support, active setup, maybe wait a long time for this one, but it's sort of culling. I have to go through. I probably have looked at 2,000-3,000 charts over the last 5 years doing this, and that weekly report is trying to take it down to like what I personally would trade. I just call it that. It's just me personally, because that whole report came from a question from subscribers. What are the best setups you see? And so, these are the ones that I'm willing to personally trade. All of them, again, my altcoin positions are always small. And then even inside that, you've got, some bigger positions than others. So
I'm curious, just in terms of the constellation of being involved with Avi Gilbert, how did you guys get hooked up in the first place?
So all of Avi's staff have been members of the service of Elliott Wave Trader. And I was, again, I came from the product world. At the time, I worked at Samsung. 2015, I became a member. I was personally interested in trading since my design career had started in 2000. So I've been kind of trading near, more than 20 years now, at different levels of success and different sort of sophistication levels. And then it's learning how to trade with Avi and other members of the service, and they basically Avi watched my work. I started getting interested. Well, I was interested in Elliott Wave theory long before I had read the book, which is Elliott Wave Principle by Prechter, and that's the kind of quintessential Bible of Elliott Wave thinking. And but never been able to practice it. And Avi has very practical way of deploying it, not just from an analyst perspective, it's not intellectual, but from a trading perspective. And all of us have sort of adapted that approach for our specific asset classes. And then so Avi goes through the process when someone's, when he got interested in having crypto on the service, he started looking amongst the members that are covering crypto, and then saw my work, and then other staff members evaluated me. It's sort of a trial by fire, I guess. And then he asked me to join staff, and then basically we grew enough to have Jason added to the service as well.
Very cool. I love that organic communal approach to building.
Yeah.
Very cool. Wow. So you really pivoted in your career. You had a huge pivot.
Yeah. I mean, I had a design career for, from 2000, I got out of design school. I actually got out of school in 99, started heavy in 2000, and then left the whole field in 2018. So it was good, 18, 20 years before I was said I was done.
Do you feel like I mean, I don't know, maybe it's a bit abstract, but is there something that you take from that world into this world?
I mean, I think that again, like, I'm no young buck. I'm approaching 50, and I think that I wouldn't be in crypto had I been so involved in technology. My last year in Samsung, I was dealing with voice recognition, and my team had to focus on concepts that were like 5 years out. So I wouldn't be so interested in technology if I was not in that world. And so it was actually a Samsung employee that we were talking about investing, and he said, "Hey, have you ever looked at Bitcoin?" I was like, "What is Bitcoin?" And this was 2012. It had already been around since I think it was 2009 was the first block, and I think I've got that right. Maybe it's 2010. Anyway, it's been around for a few years, and it went through its first bubble where it rose from like $30 to $1,200 within no time flat. And I looked at it and I thought, man, this is really interesting concept, but I don't know how anyone invests in this. It could easily go from 1,200 to 30 again. And but I started observing it. I started mining a little bit to figure, well, I can pay $1,000 for a mining machine and make some, see what happens. They make any money on that at the end of the day, but I started to get familiar with the asset class. So the whole thing reason I'm here is because of that world. I think I'm an option trader also by sort of just kind of osmosis over 20 years. I've traded the very early, like 2001. I started trading options, so a long time in options market. And again, it comes down with a sort of mathematical mind, design engineering. I think that all plays in how I see charts. I see patterns. When I was in design, I was also a user research person. So you need, I was a hand designer. I would do sketches on it, but I also had a research role. And you see societal patterns. You see things. You see themes. You see trends, and you apply that to the product world. Well, it's same. You see those sort of crypto is a trend, right? It's developing. I can see how 2021 the market is about X. The 2023 the market will be about Y. And so understanding these sort of trends that happen in the investing world also plays into what I learned in the design world. So
interesting. I love an interesting path, but really there's so many, it's just interesting about life. We pick up different things along the way, and they snowball into something. It's it's cool. So I also wanted to ask you in terms of focusing, well, you mentioned at the beginning of our conversation that you're trying to maintain patience. And I'm curious how you would advise investors kind of wading through the crypto markets in the present day. How would you reassure or encourage them through that?
Well, I don't know how you do that if you don't have a view of market structure. And I mean, that's Jason, and my role is to give people a very objective view of market structure. We hold this area, it's bullish. It's, I mean, in the most crassest sense, you hold this area, it's bullish. You break this area, it's bearish. But also more importantly, this is a region, a price area where we are interested in trade. I don't think I don't want to sound boastful at all, but we have a little bit of a track record in doing that. And by that, I know a lot of my subscribers have told me that very statement and understanding about the market structure has caused them to avoid doing a lot of stupid things. And as one, if I'm if I've got a support level, a lot of subscribers learn, okay, I'm going to pare back until we get closer to that because the risk is lowest if we're closer to support level, right? Like, if you have your stop here, you want to have your buy here, you don't want to have your buy up here, or at least most of, I scale in as kind of a pyramid, but we get our positions bigger when our stop out's here. Well, our risk is hardly anything. And that gives a lot of, if you teach someone that they can take a risk on this market with that little bit of money in play, that's reassuring versus, okay, I watch crypto traders all the time. Dogecoin is breaking out. It's going to, and they're listening to Twitter saying it's going to run to $10 or something crazy. I don't, and again, who are these Twitter people? They're just avatars on a, like, I'm a real person. I sit down with real people. You know where I'm at. If you have issues with me, you could talk to me. I don't know how these people follow that sort of emotional advice. And at the same time, if you look at all of that advice, it's usually telling people to buy at these highs versus we're usually in the market when no one wants it, right? Like that's the nature of Elliott Wave. It teaches you is to buy when no one wants it, kind of the old, Buffett adage, right? Buy when everyone's, fearful. And Elliott Wave, we see that, right now, Bitcoin's been doing nothing, but it's wild to me how, if you listen to podcasts and Twitter and all that, how negative people are. No, this is consolidation before a move, as long as it holds support. Again, I'm not saying there's 100% likely that's going to break up to 50K as our target. I can't say that 100%, but it looks like a pretty good setup to me. And as long as 300 holds, we're expecting 50. So it's, just relax, wait for it to decide that it's going to react to it.
Yeah, the signal to noise ratios are hard to suss out, I think, these days in many respects. In terms of ETFs and stocks, is there a certain division that you have between them?
Crypto, we only really have the BIDO, the Bitcoin ProShares Bitcoin strategy. I mean, GBTC as well is it's not really an ETF, it's a trust fund or whatnot. I mean, it's a closed-end fund, right? It's a difficult one because its premium discount is fluctuating, and which means that sometimes it correlates to Bitcoin and sometimes it doesn't. It's a weird animal, and the charts are really unique as compared to Bitcoin. They're sort of similar in structure, but sometimes we have to veer our accounts because it's not really correlating properly. And then of late, it's been trying to close that discount, and it's been running harder than Bitcoin, and so sometimes moving when Bitcoin was not. And so it's a bit of a mess. We do get great trades out of it. I hold it. And then again, the other one is BIDO, ProShares Bitcoin strategy, which we cover as well. It's interesting because it has to, every time it has a profit on the rolling futures, it holds Bitcoin futures. Every time it has a profit on it, has pays a dividend. With the strong uptrend Bitcoin in 2023, the dividends are massive. Like 50% of the fund is getting paid out in dividends. So it really mucks with the chart as well. I actually have a dividend adjusted chart because it's been giving me better accounts and better targets. But yeah, so other than those two, what I do like about BIDO is you get to play options. Like I'll do a lot of option selling on it to enter it, and then option call selling to exit it. So I call those. I tell people what I'm doing that so they understand what I'm doing, and I teach on the options topic. So I like it from that perspective. But other than that, I mean, we have a RIGS. It's a Bitcoin mining ETF. It has never had a good chart. I like the miners. I don't trade it. So that's about it. We have a very limited world. I imagine with SEC, the lawsuits and all of that stuff, I assume that whole area is going to grow over the next few years. I look forward to that.
Mm-hmm. So how are you looking at Bitcoin these days?
It's got so I've had a long target of 125K, and we got out when it was clear we were going to miss that in 2021. I would say we got out because I never get out of Bitcoin 100%. It's part of my long-term portfolio, but in the service wise, say we're in a downtrend. Some people may want to cut back or whatever, and I certainly cut back my position, and I was no longer trading it aggressively long because it didn't make any sense. Sometimes I was shorting it with futures, but after I was skeptical about the bottom in November 2022, but Ether actually, and I'm gonna have an article come out in the next 2 days, hopefully on Ether's setup. Had a higher low when Bitcoin was putting a lower low in November 22nd. That was actually the first hint that we're going to go into bull cycle. And now both of those coins have been up nearly 100% off of those lows. So off of their all-time lows, the 2022 lows. So I call this a bullish cycle. That is the case in Bitcoin, in my view, as long as 18K holds. Ether, I can't remember the level. It's 15 something. But more importantly, Ether has a bullish setup with a support at 1700, and Bitcoin has a bullish setup as long as it holds over 26,130. You can call it 26K if you like to give it a little more room. I probably would in my own trading. That setup, I can't see. Ether should take it to 3,200 or can take it as high as. And then Bitcoin 54K, I think, is my nominal target. And so that's a great setup. I mean, it's a great setup I'm going to probably trade futures in that one. Again, when I have signs that it has reversed. And that should continue this uptrend from the 2022 lows, which may, again, there's a lot of different ways I can view the structure. I'm going to have some other articles come out, talk about the grand structure of Bitcoin. But it may take it to 125K. There may be some wandering into kind of the halving space that may take a long time, but this may be the beginning of that final move, that finally get that move to 125K, which I've been waiting for a while.
What else do you think investors should be watching for or paying attention to in the crypto space?
I mean, I don't get too tied into the political space, but I think if you care about the space, I think we've had multiple opportunities to write our congressman about about issues. Elizabeth Warren has tried to ban, and I don't know anything I say here. I don't want to even reveal like what party do I vote for and take a political stance. I will, and when it comes to crypto, I will get on both sides' case because neither's been great. But Elizabeth Warren has attacked holding private. She's attacked the crypto market in general, but the one that gave me the most fear was the ability to hold my own wallet. And she's wanted to move all wallets into services where you pay fees and all of that, which is ridiculous. To me, that defeats the entire purpose of crypto, which is having an asset that you can transact without an intermediary. That's one of the great gifts of crypto. If really the crap hit the fan, I want to be able to transact. Gold is a little tough. Good luck trying to pay for gas with gold. Or even doing any barter transactions with gold or silver. And then on top of it, again, the attack on Coinbase. I don't necessarily disagree that some of these cryptos are unregistered securities. I really don't disagree with it, but I disagree with Gary Gensler's approach to the market in terms of enforce first versus actually having open discussions with companies and actually cooperating with the industry and helping the industry flourish in the United States. So again, those are a lot. I think any crypto investors can watch that as well. And then again, if you are that person, I said this in the beginning, if you're that person that just wants to come and have an exposure, just keep it simple and have some Bitcoin. Get that Bitcoin learn how to use a private wallet, get it into there, and then not worry about it or add to it occasionally when things dip, and to try not to get emotional about it. Because a lot of people want to just have some exposure to the crypto, but they don't want to watch it like I do every day. And I would take a very different tack than what I have, which is just get something, get 5% of your portfolio or something like that into a private wallet and just let it be, and then add to it when it makes sense.
Mm-hmm. And any thoughts on the broader market that you'd care to share with listeners?
It looks to me like a bearish setup is happening in place. We'll see if that's the case. So I'm not making drastic changes to my portfolio, but it looks to me like starting to form a bearish situation. Classically, when rates start to flatten out, you start to get the beginnings of a bearish move. A lot of people think that we need to get the rates down to get the market going, and sometimes that actually the first strike when rates first come down, usually the market's just starting to roll over, and it looks to me like that may be beginning, but we'll see. I'm not, that's Avi's department, and so I look at his counts. I've got some other things that I look at with markets from a technical perspective, and I also trade SPX like really short term. Like I do a lot of day trading in it, and that in that respect, I don't really care what direction it goes to. I wake up in the morning and my bias will be one way or another, or the bias to avoid it, because it's messy.
What's your time allotment between trading and investing?
They are concurrent within my day because I'm trading every day. And then with respect to my investments, I keep spreadsheets on my costs. So when I want to own something long term, a lot of times I'm just taking a glance at it and going, I've made some nice profit on this. I'm going to cut it back. Like for instance, XLE is I'm just using an example as an example trade. Our analysts expect it to go lower. I want to have some energy exposure. I have a small bit of the ETF. We expect lower, so I'm just waiting for it to go lower, and I'll just add a little bit, and I'll just be doing little buys at a time, almost dollar cost averaging. So I kind of use it's sort of Elliott Wave oriented, but also I sort of target DCA around where I put my greatest risk on when we expect we're near lows versus, but at the same time, if I say have a cash cost of 80, okay, now we're at 75. Okay, I'll add add 5 shares, 10 shares, very small but level buys just to dollar cost average in a little bit. So I can't even tell you how much, because that activity, I have my spreadsheets. I got so many spreadsheets up on my, I got my charts, my spreadsheets, and I'm kind of glancing, when things slow down on the services, I take glances at, my spreadsheets and go, is there anything I should be doing here? A lot of days I do nothing, and so it's just very it's chillaxed to me, so to speak. It's relaxed. Just it's sort of just looking at where I'm at, and then I also like to have a lot of cash in my portfolio, and I go, well, how much cash do I have right now? Because if you don't have cash, you can't make use of opportunities, and if that's uncomfortably small, then I may be I'll be scouring for where I can take some profit off the table, which places where it makes sense. Is it near an Elliott Wave target? Is it at risk? And I've got I'm trying to think of a recent one. AMD, a great example. I had a large holding of AMD, and I think we were near our targets, and I don't even know where it is today. And I took all of it off except for 5 shares to raise cash. And I think it's just gone higher, right? Okay, well, that's fine. I still have my 5 shares and they're continuing to make money for me. But I'm not going to add it until it's below my current average, or at least the last place. And I'm not greedy. I'm not distracted by that I'm losing that opportunity cost. This is just why I played. I got my cash out. I'm comfortable with having my cash, and I'm just going to look for something else that's on that bargain, that's near a support level that I can add to. And so I'll just be scanning my spreadsheets. So yeah, it's a very it's methodical. It's I don't have time to be emotional about anything. And anyway,
I'm going to make that my motto. I don't have time to be emotional about anything.
No.
It's a good motto. Ryan, thanks so much for sharing so much with us. I'm happy for you to share any kind of final thoughts or words with the audience. And if you want to let them know where they can find you aside from Crypto Waves on Seeking Alpha.
Yeah, I would say the only other than Crypto Waves at Seeking Alpha, I would, if you want to get a taste of the service at a very rudimentary level, I am holding a weekly monthly webinar every month, third Saturday at 11:30. I post the registration link a few days ahead, and this is the same webinar that I hold weekly with Crypto Wave subscribers. So they'll get a good solid taste of what we offer in the service. Again, only a small piece of it. I create some boundaries because I keep value for the subscribers. I only post the video for them. So you really do need to sort of show up and listen if you want to get a taste of it.
Perfect timing. We'll put it up. Yeah.
So join up at that, and then watch for my articles on Seeking Alpha. Follow me on Twitter, RWILDAY. As I recall, someone can ask me and verify, but as I recall, we have a free trial period on Seeking Alpha as well.
14-day free trial. Confirming.
Yeah, there you go.
Awesome. Good synergies. Great stuff. Thanks for sharing so much with us, and I hope to have you back soon.
No, thank you.
Just a reminder, anything you hear on this podcast should not be considered investment advice. This is for entertainment purposes only, and you should seek advice from a licensed professional before investing. If you enjoyed the episode, leave a rating or review on your favorite podcasting app, and we'll see you soon with a new episode.